Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here today with a bearish engulfing line sell signal webinar for you. And before we get into it, we just want to give you our disclaimer real quick to remind you that this webinar is for educational and information purposes only. This is in real time as the markets are trading right now, this webinar, so it will become evergreen afterwards, but right now it is live, and this is only for educational purposes only. So with that, we're going to go to our live action screen, and we have the www.forex-trading-unlocked.com website. You can always come to this website. In the navigation tab, you go up to the Forex Trading Unlocked workstation page and click on that, and that's what we have pulled up here. And you can look at different currencies and do analysis on them and see all kinds of information on them. So we have this chart that we've already created for you to speed things along. Now, last week, and as you can see right now, as Monday morning, right now it's 9:15 Chicago time, the British pound US dollar is having a nice little bounce. Now, the dollar index had been doing rather well at the end of last week up until Friday, but it really didn't have too much of a hit on Friday. But the dollar has been stronger versus the major European currencies for a little over a week. And it started here, the high was on October 12th, and then on the 13th we had this bearish engulfing line sell signal. Now, what is a bearish engulfing line? Well, a bearish engulfing line, if I make this expanded for you a little bit, okay. So if you can see how this big red line is here, this is where the body of this negative close day is bigger than the body of the previous day. And it's also after that previous day had made a top or a new high. As you can see, the market had been trending since the middle of September into the middle of October to October 12th. It peaked there, and then on the 13th, as of the close of that day, and you have to wait until the close. You can't wait until you can't just see the market down and be like, oh, there's a bearish engulfing, which, yes, that forming is the key thing. If you're saying forming, then it is not a signal. If you say it has formed is in the past with a close, then that's the signal. Now, as you can see, that the market, when it closed, it did rally almost all the way back. So there was a lot of bullish strength trying to keep this market up. But then it fell off. That it failed to make higher move highs and made lower move lows on an intraday level, not necessarily on a daily level. Now we have come back, and as of Friday, we tried to test support again, and it really didn't do very much. It was kind of like a blasé Friday, actually, when it came down to the currencies overall. But then this morning, as you can see, the market has been very, very strong for the British pound US dollar. So overall, with this sell signal, this is a bearish sell signal. So we did some Fibonacci levels here, just from this prior low here in September up to the high that was reached on October 12th. Now remember, we have a couple of key dates that are coming up. We have the U.S. elections, and we also have the Brexit date. Now Brexit is going to be on December 31st. So let's see. Oh wait, I already have this one up here for you. Okay, so this is a key thing to remember. So between now and, what is going on with this cursor? It's jumping around on me. Okay. All right, so between now and on December 31st, we have a lot of negotiations that have to happen for the UK. So this sell signal that we have here, this bearish engulfing line, right now has a downside minimal target of this $28.41 area. So basically, it's targeting a $28.41 down to $28.31. This little support band here. Now you can see that we've already come into the area closely as of last Friday and also last Wednesday. It tried to probe down there, and it's a prior low also here. So we have the 0.618 and a prior low all holding up the market right here. So this is a key little spot, and that's why we have these yellow lines here. So now obviously it's a bearish signal, so that means this is a short position. So the shorts right now, this $1.3086 level, this last high, this is your key risk level. Anything above here discontinues the signal. for one. Okay, so when you have a situation like this, that becomes your ceiling. So any trading above that means the ceiling, that the signal has either failed or it has completed itself. Now this one, from this low to this high, and then having a signal like this, the first target would be this initial area of like 50% to 0.618 on a Fibonacci level, which it's already come into this area. Now the longer term target is something totally different. That's when we go back to July all the way up to this high, and we actually have a more of a trend move that has happened. And the reason we use these levels is because if this was just a corrective move here, so you got to remember the British pound US dollar has been in a rally against the dollar since the really beginning spike of the coronavirus outbreak, global pandemic back in March. And now it ended that whole rally at the very beginning of September. Okay, so this market has been breaking for the most part until the middle of September, and it had a nice sell-off. And the question is the bear market going to continue, and is this just a correction, or is the overall longer-term bull market going to come back, and this is just the beginning of a new wave higher? So, since we have this bearish engulfing line sell signal, we also have this longer-term area. Now, where we had this wave here, we have a lot of Fibonacci harmonics going on here. So this is why I think we have a chance of still seeing this market turn back around, even though today it's higher. So this prior major low here was at a very strong Fibonacci pivot point. And then when we made this low to this high, we came into and already hit these key Fibonacci levels right off the bat. Okay, and they line up with the longer term one here that we have off of this low from back in July. So you can see that the 0.618 level here from July comes right in just above this more recent major low over here that was back in September. So this is another big support area, just like this critical low is here. So if the market reverses and continues with our sell signal back through this little first target area here, then it's very likely that we can see the pound US dollar get down into this area. Now, we probably will see a little bit of bouncing here because this was a key area of support for the pound US dollar. If this thing was to blow through it, well, that would be very negative. Now, markets tend to go out like they come in. If this is really, you could probably see us get back down to this $1.22 area here, where this little line, green line, is here off of this low here that we had back in July. So this would be the longer term target for if this trend continues to be a bear, but that would be something that I would think would happen over the course of the next 2 months. It's not something you'd see over the next couple days or couple weeks. Now, the steepness of this trend lower, and just by attrition, we can take out this downside resistance. So right now, the fact that we're butting up against it today, and ironically, we did kind of hit the downside resistance level there, holding the day intact as far as the bulls, and if we're going to reverse gears, this would be a good spot for us to turn back around and then come back out and take out Friday's low over the next couple days. If we take out Friday's low, that confirms lower move highs and lower move lows, which is indicative of what? A negative trend. It confirms that follows through with our sell signal, and the negative trend is confirmed with newer move lows, and then that would have us targeting this lower support band of around $1.2831 to $1.2720. So you're looking at a good, right now, $1.30 even. So you're looking at a good $2 move, upwards of, almost a $2 move, selling into this rally right now. And your risk right now, you're looking at, it's $1.30. So let's type this up here and make this really clear here. So your risk is 1.3086. Sell signal is on. Downside target is 1.2840 or 31. And downside target 2 is 1.2241. Okay, so now for the video, we got this here. So our risk, once again, for this trade is this $1.3086 level. That's this yellow line, which is this high, which was established the day before our bearish engulfing line sell signal. Now, a lot of times, the reason we're doing this video is that not only is this a high probable Japanese candlestick pattern, it's a one-day pattern, but it's a very, very reliable one when you've had a trending market like this. Like this market had been trending for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days before this signal had occurred. Anytime you have at least 5, but usually you need more like 8 or more days trending or bars trending, and this engulfing line sell signal happens, it makes it usually pretty valid for at least a short run. This one already has hit the minimal target, and now we're looking for it to continue back down to hit the longer term target. So the sell signal is on and will be until this market takes out this previous high. So if it goes above $1.3086, and this is where your stops would be if you were short this or selling into this. And right now see the sell signal is still on, and you're getting a chance to really get in at a better price than you could have had you entered right when the sell signal was triggered. So right now your risk-reward ratio on this trade is very minimal. So it's 86 pips because right now the market's basically $1.30 even. That would be your risk on the short side. And your target is $1.2831. So right off the bat, you're looking for risking 80 pips to make, what is it, 170. So you're looking to make more than 2 to 1, which I always say you have to have at least a 2 to 1 ratio as far as what you're looking for to make on your trade, and 3 to or 4 to 1 is even better, but 2 to 1 is your minimal one, and that's when you use high probable situations and trading signals, which we'll get into in a minute. And now your downside target number 2 is $1.2241. Remember, that's this previous low area down in July, which I think that if you take into account that the UK has to make trade deals with the EU because of the Brexit separation, they also have to make trade deals with the United States. So this is not a political thing. This is a must-do by law thing between multiple countries. And what's going on with Brexit, we have nothing to do with Brexit, but because of it, we will have to make these things happen. So it doesn't matter who wins the election. The current president will be dealing with it. Trump has to deal with this is not a trade war with the UK or the EU. This is just a resetting of terms because of the fact that they are now separating in complete terms. So with that being said, I think today you have a little bit of positive news for the stock market, starting the week off, which that usually with a positive stock market and positive this and that for what's going on with the economy, that is actually short-term negative, the dollar. So in the short run, I think that's why today's rally is happening. Now, like I said, this is giving you a good opportunity on an ROI basis for a sell signal because you have the bearish engulfing line that had occurred last week. We are still below that risk level, and when you have in your ROI, if you were to go back and even just test the original lows, let alone get to this first target at $28.31, and even down to 27.20, like this 28.31 is the first part of this. This is a support band here. So 28.31 down to 27.20, that's already a nice bang for your buck, let alone if the longer term short gets all the way down to $1.2241. Now, what I would do is once you do have this, if it does come down into this lower area here, this downside target of $1.2831, immediately put since right now you'd be able to sell it, put in a break-even stop, but I would probably put it more with at least a few pips of profit in it for you, or even put it just above like the where this became originally support. If we fall through this $1.2863 to $1.2841 area, which is this little band here, then I would use that as your risk level as the market comes into this lower thing, and then ride the trend. You never know. You could constantly keep on lowering your stops as you make your way down this. And now this trend line here, I don't think this is going to stay complete resistance, keeping the trend bearish on this slope. By attrition, we can come through it, meaning that just over the course of the next couple days, we can go sideways, and all of a sudden we will breach this downward sloping resistance. That just changes the slope of the bearish trend. That doesn't necessarily mean that we would have a bullish breakout. Like I said, you have to violate the $30.86 level, this previous high, to negate the sell signal, let alone the trend change also. So this is where the bearish engulfing line is a really good reinforcement to what is going on in the market. Because here's the thing in reality too, is if the signal fails, well, it's already actually hit the first minimal target. But let's just say that it does get above the previous swing high and negates the bearish, outlook. Well, that's a good thing. It confirms bullish intentions, So then at least which side of the market you should be on. So because then that would confirm more momentum for the current trend that has been up for the last 2.5, 3 weeks, with only having the last week being more of a negative weight as far as the pound US dollar. So let's blow this up a little bit more so you can see it a little more clearly. And once again, here is our sell signal that had occurred on October 13th. Today is the 19th, so that's 6 days ago. And now we have Monday's trade, which is exploding higher. But look we're coming off of our highs, and the reality is now it's already 9:30, so the stock market's been open for an hour. Now remember, on Mondays and Fridays, the first and last hours there's a lot of balancing that goes on. So you had the people that took on weekend risk. There's everything from margin calls, whatever. That's just normal balancing on Mondays in the equities markets and other markets. But this one is a trend-driven move. The dollar has been going lower since Sunday night when the currencies open. And this is a global thing. All the other currencies today actually have been stronger versus a dollar for the most part, especially your major currencies. And that's the one reason why this is an excessive move in the pound. So the pound is one of the biggest movers in the dollar index. So that's making that spike today as well. But also, like it goes in, it goes out. So, and if this trend really is bearish still, and the bearish pound US dollar traders are on the right side, then this market is most likely to have basically used up all of its momentum to the upside, and the bears are just slowly getting ready to drive this market lower and lower and lower and lower. So the sell signal's in place. Now, if you want to get an idea on how to get, now I used Fibonacci here with the sell signal. There's a better way to trade these high probable Japanese candlestick patterns, such as the bearish engulfing line. And I love this one. This is one of my favorite ones. Now, there's a book out there called High Probable Japanese Candlestick Patterns, which you can read. It's available on Kindle and paperback versions on Amazon.com. So you can check it out. If you go to the Forex-Trading-Unlocked.com website, you go back up, see we're on the workstation page here. You go to your products and courses and services. You go to High Probable Japanese Candlestick Patterns. You click on that, and that will take you to how you can get a view of a short-term clip of the reading and learn about how you can exercise these buy and sell signals that have been used for over 400 years in the markets. So, and a lot of people don't like Japanese candlestick patterns because they have not been instructed properly on how to use them. In this book, you will learn the time frames to use. Most people use them for intraday, which you can't use them. And then they try and use lots of patterns that just they're not very valid very often. So I've put together the highest probable chance indicator patterns that they have developed over the years, and these work in all markets, whether they're forex markets, futures markets, stock markets, and what have you. So today our example is the bearish engulfing line sell signal for the British pound US dollar. If you like this video, please subscribe to our YouTube channel so you can learn about more of our lessons, and also when we do webinars on the Forex markets and what's going on a daily or weekly basis, whenever we have signals are triggered, we let you guys know. And now if you want to learn how to actually trade them, though, you got to read the book. That gives you the rules to on your risk management, what levels how you pick your risk levels, how you pick your target levels. It is not done like I did here with just a Fibonacci. This is a more basic way of showing you how to find support and resistance, and it's also very quick on the charts. And if you want to know the proprietary stuff, you got to pay for it, and it's not that expensive to buy the book or read the Kindle. So but that gives you the full formula, which then you can use that to actuate trades in both, like I said, any of the currency markets, futures markets, stock markets, options markets, and what have you. So for instance, like this, we have the British pound US dollar, this bearish engulfing line sell signal once again, where if it's targeting lower levels. You obviously report on the next trading bar, the British pound US dollar, which now you have a chance to get in at a higher price, so selling at a better level and risking less. Now the signal already hit the first target, so getting in now is not necessarily a good idea. Usually you want to do it when the signal has occurred, but in this situation, if you are a bear, because the signal is still on, well, it gives you a chance to maybe have another run at support and maybe at least make a few pips off of it. And you also know that if it takes out this high now, that becomes a very bullish signal. So for bulls, you have a breakout level that you can have more faith in. So with that being said, when you want to figure out bulls, once again, you like we used here for this for each wave. So you had like your major low here, your major swing high here. To find your corrective way down, we found the 50% and 0.618 levels, just like we did from the low back in the end of that rally, which was the rally that stopped at the beginning of September. And then these, ironically, the 0.618 level came in very close with where the low was for here, as well as the 50% came is really close to where this swing low here was. That's the basing of where we're trying to figure out now, are we going to be a bull or a bear in the longer term? Now, because of the fundamentals, once again, and this is kind of funny how when you get a bearish engulfing line sell signal, and we're almost done with this video, you usually have these occur at big events geopolitically a lot of times in the market. And because of Brexit and the finalization of that going from now into December 3rd, the pound US dollar, even if we do get a spike higher, we're more likely to be setting up for a neutral to lower trade until these dates, at least until the deals are done. So if a deal gets done sometime between now and December 31st, that could be very bullish to pound US dollar. But until then, it's very bearish. Now, we also have the election coming up in the United States. That's the one part of the component that could give the dollar a lot of strength. It's right now, at least until the election is over, and even if when the election's over, Donald Trump is still president. So that's the one thing where dollar strength may hold up, where it's going to be neutral to higher, just because until he's out of office, either in January or he gets reelected, that's going to keep the dollar probably in a sideways to neutral to higher outlook against the pound. And then at least until the Brexit is over. After the Brexit's over, that's a different story. But until then, that's the most likely scenario. Now, should Biden win the election, that's a different story, because if Biden wins the election, that's very bearish, the U.S. dollar. In that case, then you're probably going to see a neutral to higher trade develop going into the end of the year, because it doesn't matter what kind of deals are set. They know that once Biden's elected, between the social and economic policies that they're looking to put in, it's going to have a big weight on the U.S. economy. and the US dollar. So that will then take over as a very bearish thing, meaning that you will probably see the pound US dollar up a bit, taking out these highs that we had in September in a very, very short time. So that was something to look forward to in another couple of weeks. But as we trade into the election, I think right now, and as you can see it on the hourly, let's go to the hourly real quick before we end this video. We're almost done. So you can see how we had an erratic, the algos were kicking this morning when they first started off the day, and then bam, we had this nice little rally that we came into our downward sloping resistance. That looks about like it's it. The last couple hours, it's been kind of really sideways and not much of anything to really be concerned about. And I think now that the stock market's open and the markets are open for the week, it's Monday. We have a lot of trading to look forward to over the next couple days. Not to mention the news, and we keep... Actually, I have to go and do my early voting today, so don't forget to vote. It's important no matter which side you want to vote, but you can't be... can't complain if you don't vote, and if you do vote, at least then, you know what, you pick a side and you deal with it. You move on from there. So don't forget to do it. It's very important. And once again, like our video, please subscribe to our YouTube channel. Always check us out at www.forex-trading-unlocked.com. And if you want to learn how to trade this bearish engulfing line sell signal, read the book High Probable Japanese Candlestick Patterns, available on Amazon.com. And it's through it you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. With that, I want to thank you very much again on behalf of Forex